Wonderful. Hi, everybody. I'm Kyle Ellicott. I'm your host for another edition of VCTV today. We're super excited to be joined with a outstanding panel from around the world of both investors and industry experts who are here to talk to us about a very specific set of topics today. Things that have been, I would say, of all the topics we've talked about, really dramatically accelerated over the past 6 months and have been on this trajectory for the past few years. And that's talking about artificial intelligence, robotics, virtual reality, and gaming. If you're paying attention to anything in the news, or if you're in any of these industries, you know the game has dramatically changed. And if anything, forever has changed. We're seeing gaming numbers surge. Nintendo Switches have sold out at almost everywhere in the world week after week until recently. Esports has started to see a dramatic rise and increase in viewership in gaming play. AI and robotics, AI from the data side, robotics from how we are handling manufacturing and essentially the logistics and our supply chains going forward, and virtual reality. As we talked about on our last show earlier this week, the rise of the virtual economy, where we are looking to check in to the oasis for those that are Ready Player One fans. We're ready to start accepting the idea of getting into this virtual reality where we can interact and transact in a new way that we've only once before seen at its capabilities in science fiction, now is starting to come to our living rooms. So without further ado, I'd love to welcome each and every one of our speakers. But before I do, thank you to our audience. If you have any questions, feel free to drop them in the chat. The team and I will try to get them answered during the show. If not, we'll have follow-ups at the end, and all of our speakers are available on social media and online as they will share. And a big shout out to Elena and to the entire LA Token team for making this all happen and for making all of us look good and everything runs smoothly here. So without further ado, we are going to go Brady Bunch style. Jonathan, I'm going to call upon you. Welcome to the show. Welcome back. If you can, just a quick introduction, who you are, how you got into your respected space, and we'll go through everyone else afterwards.
All right, fantastic. Well, it's great to be back, Kyle. Thank you so much for having me. Just a quick background. It's more with publicly traded companies. We've serviced over 500 over the last 14 years under the Investor Brand Network. One of those brands is Cryptocurrency Wire. We've partnered with y'all on a couple of different events, and I really see that intersection of the capital markets and crypto being really closely correlated. And then personally, I do love gaming, and I'm a huge fan of virtual reality. I was one of the first to get a professional, headset probably 4 years ago. Actually, even before that, when I was just 12 years old, I remember spending some money on a virtual reality set from Toys R Us. It wasn't anything like what we have today, but very glad to be here.
Well, we're excited to have you, and glad that you're sporting the gaming headsets, but try to refrain from playing any games for the next hour or so. We got an exciting game ourselves here. Rana, welcome to the show. We're honored to have you. And if you could, same thing, introduction and a little background on yourself.
Well, thank you. Thanks, Kyle, for having me. So my background is a mix of entrepreneurship and investments. I've been building interesting products and investing in interesting products pretty much my entire career. Early days, build out cloud business for Kronos, for Logitech, head out their smart home business, launched Google TV, which was a precursor of Chrome Stick. Then did a tech turnaround. It was a company that had shrunk from $500 million to 30 million with a negative 100 million EBITDA and a 300 million debt on the balance sheet, and worked on it, got it to plus 110, and was an amazing turnaround. I did a startup called Ties back in the day. It was a machine learning startup that built a very specialized system for the specialty chemicals vertical, used machine learning back in the day. I've been investing for quite some time. Most of my investments are post-seed, pre-A, and really in the realm of things that I personally understand, which is actually very few. Mostly related to specific aspects of technology and AI. Currently, I'm also leading an AI startup. It's a deep tech startup that focuses on deriving insights from tone of voice, behavioral signals, emotion signals and intent signals. And so that's really my area of expertise. I do invest both as an angel and also through a couple of funds out here in the Bay Area and the Valley. And certainly the last few months have been quite revealing, and I think in an interesting way, and lots of change. I'd be happy to, talk about some of those experiences. So yeah, that's who I am. Happy to get deep dive into this conversation.
Absolutely. I got to say, I'm a little jealous also being in the Bay. It looks a lot sunnier where you are than where I am. The joys of the microclimates of the Bay Area, but it is nonetheless welcome.
It's nice.
Yeah, but I mean, the man who looks like he's in the nicest place of all of us, Tony, welcome back to the show. Multi-time guest, a personal favorite that I've had the chance to interact with on this show, and excited to kind of hear your voice. But introduction, as you know, and kind of how you got in.
Thanks, Kyle. I'm glad that bribe was used well to give me a nice introduction. I'm actually in North Wales at the moment. Usually I'm based out in Tokyo. I have a finance company that specializes in blockchain and in crypto projects, but we specialize more in the hybrid of bringing the traditional to the modern. We created the first M&A on blockchain. We're in the process of creating asset stripping and distribution of assets like that. We work in regards, like Rana said, he does turnaround. We do turnaround as well with projects. So we're basically the old and the new together. So
I'm excited to dive into that, but also your background in Japan, because I have a good feeling it's pretty relevant to our topic today.
Yeah.
And Bashish, welcome. Thanks for joining us. Same thing, quick introduction and a little background on yourself.
Kyle, thanks for having me over, and I'm glad you got my name right. My name is Vishesh. I run a fund called Special Invest out of India, investing in India, US, and Israeli markets. We're a pre-series A fund, $40 million in size, typically investing about $500,000 check sizes. Focus is largely deep sciences, deep tech. We've done most of what's there on that list: AI, AR. We've done something in robotics. We've done something in space. I think we're largely enterprise software and industrial hardware in our focus. I'm glad to be here, and I'm looking forward to the rest of this conversation. Thank you.
I love it, Elena. We're gonna have to get an episode of VCTV all about space and get Bashish back on here. That's gonna be it's gonna be a rising topic. All puns intended on that one. Awesome. Well, guys, I think we've got everyone welcomed here in terms of speakers. Federico is joining us as well from last week. We're excited to have him. He's going to be a part of our second half of the episode. But Federico, do you want to give a quick introduction and just say hi to everybody, and then we'll bring you in on the second half as planned.
Yeah. Hello, everyone. I'm Fred from Brazil. I'm a control engineer, PhD in knowledge management. I used it to code artificial intelligence in 1990 in Lisp. And so that's a long time. Right now I'm into the crypto space, investing in blockchains or in the secondary market.
I love it, and welcome. We're excited to have you and dive in with you on that second half. So gentlemen, as we kick off the beginning of the show, pre-show we were talking a little bit about how everything in these areas have changed dramatically. And Rana, I'm going to have you start us off, but I just want to say, I think, again, a lot has happened. And if anything, it was planned to happen. It was on that trajectory. But due to the circumstances at large, these areas of technology forever changed the game into a lot of areas of our life. As I mentioned, gaming has seen more sales and probably more game time and new business models come out of it faster than anyone would assume that are producing. The virtual economy is starting to surge. I'd love to hear your thoughts on kind of where are we truly with these areas, and I'll let you kind of pick your topic and then we'll go from there with everybody else. So
yeah, that's the question of the day, right? So I think my assessment is that, look, there were certain trends that were certainly making their mark. And what we've seen is acceleration of those trends. And I think it's more of that versus some massive new business models suddenly coming to fruition in the last 3 months. And that's what media might want to, have you believe, but that's not what I've seen. Like say, for example, I've been pretty close to the gaming and the video conferencing business models with my years at Logitech. And it's a company that I've been at twice in my career. And what I've seen is like this massive progression of people moving into the gaming sort of paradigm. And that trend has been accelerating for the last 10 years, year on year. And, it certainly, even pre-COVID, it was on fire. It was literally on fire. We've seen, if you sort of look at a company like Logitech, we've seen that the portion of the business that came from gaming has doubled every year to become one of the largest revenue generators in the company. This is all pre-COVID. And so post-COVID, it just accelerated. Same's to be said about video conferencing, remote working. I mean, those were the trends that were already in play. It's unsustainable to have massive portions, massive portions of the population converge at a co-work location. Especially in cities which are, beaming, and they're sort of like almost sort of at the edge of exhaustion from a resource perspective. And, so those are the things that we've seen. And now post-COVID, some of those trends have been certainly, accelerated. I think investment side, lots have changed, right? I mean, I've sat through a lot of triage meetings with the funds I'm part of. And there's been some really hard conversations, and I think a big part of that is everyone's got caught down by surprise. I think some anticipate, there was certainly anticipation around a slowdown and a correction, but no one really figured that this is what's going to come down to. And with that, there's been situations where there's companies that are very poorly capitalized, but they're great investments and they're great business models, and you can't let them die, which means you're going to have to give up on some other investment. So a lot of what we have seen from an investment standpoint, and I think, I was on a panel earlier and a question was asked is, why are investors not investing? What is happening? Why are my term sheets being pulled out? Where's this money going? The money's still there. And what's happening? It was like, well, I mean, what's happening is that you're looking at your portfolio, you're distributing your portfolio into, hey, which are my good eggs and which are my bad eggs. You've always known them, right? You've always sort of had favorites, and you have had the part of the portfolio that you didn't really like very much. But now you're looking at your favorite bucket, and you're seeing a lot of stress there, and you're seeing a lot of your favorites were undercapitalized, and you got a choice to make. Either you're going to let them die or you're going to save them. And so if you're going to save them, the money's got to come from elsewhere. So all of these newer investments that you're going to go do, that's going to get redirected. And that's what's happening. That's happened a lot in the last 3 months. And that's what sort of resulted in term sheets being pulled. But I think that's temporary, because, if you're a solid business with a solid business model, and you're positioned right, and if you got wind on your back with some of the trends, you're going to come out of this stronger. And the other part is that, I mean, from an investor standpoint, certainly, I mean, I'll speak for myself, but also what I'm looking at with my fellow investors, most aren't really investing in pivots, as much as that sounds. I mean, we're investing in companies that were on the right path previously, and now you're looking at some changing trends and how those changing trends accelerate or get the winds on the back of those companies and those business models. And so you're less interested in suddenly a company becoming very relevant post-COVID. That's suspicious, right? So if you're a company that really had a questionable business model or weren't really doing much, and then suddenly post-COVID, it's super impressive, and they're making a lot of money, I mean, the first thought that comes to mind is, how sustainable is that? And is it going to suddenly disappear? So that's a lot of those big trends that we can talk about. I mean, I really question the pivot thing. I don't see it as much in the decisions we make. It's more about, how you're positioned and how you were positioned previously and what the trends are doing to you.
Yeah, and it's a combination of triage and opportunity, but opportunity to what? right? Triage, as you said, as an investor, we have to look at our portfolios and make sure things stay alive, right? We're invested. So you may have to double, triple dip, play around with what you have left and where it comes from. And that comes from dry powder and or, where you would have made other investments. You have to realign that to keep your investments going. And opportunity, it's great to seize the moment. You're trying to do that with your portfolio companies, as we've spoken on other episodes. But when new companies come along, I think that's kind of one of the first questions to be asked now is, this is great, but what happens? But how are you thinking? And it's not that you have the magic answer, right? The pivot is not necessarily the magic answer, but how are you thinking about preparing yourself ahead of this great opportunity, and for some, and obviously not for others, but how are you preparing yourself for after this? And is it sustainable? Because it may not be. Right. It may not be, as we've learned. And Vashish, I would love to hear your thoughts. I mean, you're in India, but you're also making investments in Israel. So Israel was and by the way, you're on mute, so just let you know. I mean, Israel was a hot zone for investments of all sorts and sizes, and India is exploding with capital right now. We talked, I think, Fred, on your last episode about earlier in the week. India has overtaken China in fintech investments. You've got marketplaces and economies that are exploding in growth. This does not seem like it's a blip. It seems like it was a trend, super condensed and accelerated. I mean, to Rana's point, what are you seeing in all of this, and what's all changing? And welcome, Tess. We'll welcome you here in just a minute, but Vashish, go for it.
Yeah, so I think I'm going to pick up on where Rana left, right? I think one of the things the current pandemic has sort of left us is with some sort of a deep acceleration in adoption of technology. Do you hear me okay, Kyle?
Yeah, loud and clear.
Yeah, okay.
Loud and clear.
Okay, great. And a few businesses are on the right side of the tail, and a few businesses are not so on the right side of the tail, or rather on the left side of the tail. And India presents a couple of very interesting opportunities. It's got a humongous, large, growing consumer opportunity, which is where China was a few years ago, and which is why you're seeing a lot of capital come into the country. And these businesses have to be increasingly watchful, because with what's happening now in terms of there being a lockdown and people being at home and people sort of figuring out their next jobs, a lot of the wallet share and the spend have sort of changed, and hence businesses around them have sort of changed. And people are going through pivots. And what's important to think through pivots is not just finding a new customer or finding a new product, but what is the sort of economics of the business that you're building and how sustainable is it? And I'm sure sort of people are going through those cycles. The part that I'm more excited about, and the part that the fund sort of focuses more on, is on the enterprise side, which is sort of the deep tech, the deep sciences side of it. And I think this is as good a time as any to sort of build these kinds of businesses, because people are frugal, expectations are sort of hunkered down, and people want to put their heads down and go build technology. We've in the last few months invested in a robotics vision company that's essentially got the ability to pick, orient, and place objects, which is what they're essentially doing is putting an eye and a brain on top of an existing robotic arm for it to be doing things it hasn't done before, right? And I think some of these opportunities are seeing faster adoption in how they're being played out. Purely in terms of funding and funding sizes, I'm going to pick up something that I read from a GP at Red Point in the US, where the theory and the past data essentially show that in situations like this, you will see risk aversion. You will see early stage having a strong correlation to macro, which means you will see people walking away from seed and pre-series A rounds. You will see them doing more later stage rounds because there's a lot more data. There's a lot more clarity in terms of pricing the opportunity and all of that. But I think in a few quarters, I would say in 3 or 4 quarters, you would start seeing some stabilization and pick up in the early stage activity.
So from what you're thinking is, with all this happening, you see a stabilization to Rana's point is, is this all sustainable? You see that kind of sustainability moment coming later half of Q1, or excuse me, of 2021 is what it sounds like.
Yeah, that's my view. That's right.
I like it. So Jonathan, same to you. What's happening? What are your views on all this that's being accelerated so quickly?
Well, I definitely see something like the pandemic introducing people to other technology. We saw the VR headsets completely fly off the shelves, and even used headsets being extremely high priced there for about a month or so. Some of the big news that we're seeing, first from Apple, they acquired NextVR just last month, and I'm sure that the pandemic had something to do with accelerating that acquisition. They also acquired an AI startup, since we're talking about AI, Voices here recently as well. But I guess I see it as even something as simple as grandmas and grandpas now using online credit cards, where before they absolutely refused to. When you have such a push and it introduces you to something better, a lot of times you don't go back. So I really think we're on a sustainable trend, and it's just been accelerated.
Yeah, and on the VR note, I want to go one level deeper with you on that before I get to Tony. You know, Apple has made a number of investments over the years on AR, and we saw a lot of that integration come this recently. And you're right, VR headsets flew off the shelf. Hardware-wise, that's great. In your mind, what's happening on the software side, the experience side, right? Are people actually putting these on? Are we going into the Oasis or a version of it, and are we becoming more accepted to that and something you think we're happening, or just on gaming in general? I mean, esports is no longer just esports competitive. I mean, people are playing Animal Crossing like they were going to happy hour. It's definitely a new thing. How are you seeing those types of experiences, either as a blip, or are these things going to be long-term opportunities?
We definitely have further to go. Fortunately, we have gaming, we have high-end CGI and other things that have kind of accelerated where we can start off. But if you look back at the early days of gaming, I'm not going to go as far as Atari, but I think things really started to take off when the Nintendo Entertainment System came out. And I kind of feel like that's about where we're at right now, adjusting for the additional technologies that we have. But I also think that we need to be more realistic about what people are comfortable with. I think if we had more shorter experiences, because it gets really hot, putting your eyes in this thing and some kind of ventilation, I think some more time should even be spent on the hardware side. So you actually want to wear it for more than 15 minutes.
Yeah, it's a great point. I remember the first time I used a Nintendo 3D, the black and red system. My eyes, after about 30 seconds, were drier than they've ever felt. But Tony, to you, sitting at this intersection of M&A, right, helping companies transition and go through that process, what are you seeing happening in the space right now around these areas?
It's actually an interesting one, because we've actually just done some investment in this field in regards into, we have a simple philosophy of trying to find the old and the new, okay? Not trying to find the next game or anything like that, because there's experts out there and there's much cleverer people out there. But the hybrid between the experience they can achieve and the technology, that's what we've seen. So we've invested in Japan in regards to clubs and in regards to bars in that does these kind of VR experiences, because the technology, and it's accepted there. In Asia, it's much more accepted in regards to gaming in reality and stuff like that, and it's becoming much part of the culture. So we've been investing into businesses which has the hybrid between the technology and the reality, because we're still not there yet where we can go fully into the VR. So we've seen it through clubs and bars that have been doing these, and is actually becoming very, very successful. And also from an adult point of view, there's also a huge amount of businesses that's been invested in that side as well. So we've got some interesting projects, I have to say, but I'm cautious. This is a family time, so I have to be careful, but there's a huge amount of opportunity from all sides.
You know, it's funny, I completely forgot about that. And having spent so much time in Asia, I remember seeing those VR bars or even pods, right? Where you would go into a shopping mall and there was a little pod that you would sit in a phone booth and you'd get into the VR headset and, experience this new gaming. And that kind of came and went. And now, as Jonathan and Vishesh mentioned, I mean, these headsets sold out. And so we weren't even able to really experience everything to its maximum. So absolutely agree. And I've got another question I'm going to come back to you on in just a second around that. But Tess, welcome. We'll get to your intro in a little bit. I know you've got tons of experience in this space, and we're right now would love to get your experience and thoughts on where things are in terms of gaming and VR. Are you seeing anything, change dramatically? I know you're an early investor in NextVR and a few others. What has changed since making those initial investments to not just today, but as Jonathan and Vishesh mentioned, where we're going in the near future?
Excellent. Thank you, Kyle. It's always great to be back. So I'm Tess Howe, founder of Tess Ventures, the early stage investment firm. And myself and my team actually do believe in founders and whatever sector it is. So back when VR was a little bit more hyped, even before that, being able to have through one of my other entities, meet the NextVR team at such an early stage where the actual headset was actually, making everyone very dizzy. So even my Sand Hill Road, BC friends, when we try to pound the pavement and let them know that this team has amazing experience, they will be able to guide us to the future. We don't know where it is yet, but we have to start here. Many general partners and different VCs could not wrap their head around it. So therefore, some have passed, and looking back, I think with Apple's acquisition, it's actually very exciting. COVID obviously did accelerate that because of the fact that, my friend, he who always travels would say, I want to make sure I go check out the VR studio. And this was just last year. And I'm like, wow, there is really a group of people that actually do value the hardware, physical, grand experience, and also at home. When he got locked down in Asia City, he's like, I can't believe I couldn't order one of those. And now it's so expensive, but I'm still going to do it. And I was like, that exactly is the reason. It is because people feel like, okay, I want to, play video games. I want to have more gaming experience at home. I want to enjoy that virtual reality or AR experience. And that's why today it's just going to accelerate the adoption of it. It may not be, perfect or suitable for everyone, but it is going to give people that, easily entry level that they're willing to accept it. So that's why I see, from VR to, AR, especially with what happened with the Pokemon game. Impressively today, my family office friends, I was just in Indonesia in February, right before the lockdown. And they mentioned that they actually are the second generation of the family conglomerate, and definitely a shout out to them. The husband and wife and 2 kids, they are busy running billion-dollar empires. They're in their early 30s. They say, I need a break. We go to Japan and we want to make sure we are really focusing on, being able to achieve all the, Pokemon awards and all the experience so that they can be a certain level. And that's what they do for 1 week. And I was just so impressed. They easily are investing into millions of dollars into different, startups. And this is the husband and wife. And I said, who's more competitive? Is it the husband? And they're like, no, it's actually the wife. And I was just learning so much. Their kids are, like 7 and 5, I think. So I was like, there is a group that absolutely will be followers from start till end, and consistently whatever technology they're going to adopt it. So that's why I'm very, just excited to see how I believe, VR, some of my other contacts are absolutely now embracing it, especially for real estate, because that experience, just recently, one of my forums with a female investment is executive. She mentioned, yay, I'm so happy. I got my dream flat, my dream home in London just 1 week ago. So we're all asking, how did you pull the trigger when everyone's in lockdown? Did you just do it virtually? And then are you okay accepting, the downside of not being there physically? But they said this is their dream flat. So obviously it was not, just the first entry level. And obviously that is with the VR experience. At least they were able to, the real estate, build developer side was able to utilize the VR experience and give them that walkthrough. So it is very exciting just being able to see that tech that was old tech actually can be adopted, in the moving forward future in many sectors.
Yeah, and I completely agree, and that's kind of that family effect, if you will, is definitely being felt. We mentioned it with Animal Crossing. There's this new trend of a happy hour on Animal Crossing, right? It's like, okay, it's 5 o'clock. Everybody pull out your Nintendo Switch and let's go fishing. Which I'm sure is a change to many other industries as well. Ben, welcome to the show. Just a quick question for you is, what are you seeing changing in your mind or worlds around gaming, VR, AI, and robotics? As I know you're involved in a few of these areas, and we'd just love to have your opinion. And then Rana and Vishesh, I've got something big coming for you guys here just in a second. But Ben, would love to get your thoughts and opinions on all this.
Thank you. Good morning from Berkeley.
Good morning.
The acceleration trend somebody have mentioned, I'm seeing as well. The only thing I want to add to it, I would say, I'm seeing, because of the increased likelihood and increased financial woes of many people, the need for a passive income and extra income. So I'm seeing AI starts getting looked at by my clients. AI companies that are utilizing what they call little employer bots, things to help you make money, things to facilitate your transactions online, things to enable your data sales, personal data markets, things like that, to help ordinary people earn more money. So that's an interesting business model I see emerging. Also with robotics, of course, things that interact in the world for people. So more interactive robots. There's more family robots, robots connecting the disabled and the elderly, just because they're going to be at risk from contracting COVID. So more telehealth applications connected to a movable entity. And then third, I'm seeing a lot in the way of the kind of crossover between gaming technology and AR for the purposes of having meetings and conventions. So those are definitely things I'm seeing.
Yeah, we talked a little bit on the idea of what I'll refer to, and there's been a ton of talk about this recently, is this virtual economy. So that new area, new opportunity for income. And you touched on AI, which, Rana, Vishesh, I'm coming to you, is what role is AI playing in all of this? AI, I remember, call it 5 years ago, more people than we know and more money than we could all dream up right now was thrown into these AI-based funds. And I say that because a lot of people raise brand new venture funds around the idea of investing in artificial intelligence, and then things got very quiet. And I think that now you're starting to see artificial intelligence have an absolute role in a lot of the things we do. And it's not that it's always public. A lot of times it sits below the surface and is powering a lot of these things, but not everyone realizes that, or it's just being tossed around as a buzzword. So, Rana, I would love to hear from you, and then Vishesh, I want to come to you on this global perspective of what you're seeing as well. But Rana, where does AI play a role in all of this as it's pushing forward?
Yeah, I mean, so let's start with sort of trying to understand what the purpose of AI essentially has been over the last few years. And that's largely really helping us automate things for the most part. The things that we could delegate to a computer system or a machine that frees us up to do other things, right? So there's been sort of this overblown hysteria around it's going to take away our jobs, and the robots are here to sort of kill us, and etc. But I mean, for the most part, it's really small things. It's things that help us be more productive, more efficient, and we've seen a mega trend on AI, as you just said, Kyle, over the last decade or so. Last few years have been it's been massive trends of acceleration. And what I see what I see right now is that it's really everywhere. I mean, AI it's hard to demo, right? So if you go to a conference, you can't necessarily demonstrate AI. It's behind the scenes. It's in the computer systems. But for the most part, it's being used in 1,000 different places. What we're looking at is small essential value adds, such as automating how a contact center worker does his tasks, and minimizing errors, helping a salesperson sell better, helping a doctor be focused more towards the patient at hand versus accessing database or writing notes, and small things like that. And those things have been in use. I mean, they've been in commercial settings, they've been trusted on, and the accuracy levels have been consistently getting better and better. And so what we're looking at right now is that it's really coming into its own. We're seeing a lot of interest in AI solutions. And there's a lot of money that is being focused towards those specific use cases that can benefit from the accuracy levels that we've gotten to today. Access to data has gotten a lot better. I mean, for the most part, a lot of the companies have gotten their act together, and they have the basic systems in place from a GDPR compliance standpoint, and they're okay trusting new technology. So, like, for example, we entered into an engagement with a financial institution last year, which had a very specific interest in leveraging AI towards their collections outcome. But their biggest hesitation was, compliance. And that's been a massive issue, which is like, I don't know if I'm able to use it. I can see this technology adding value, but will I then get hit by, some sort of compliance violation? And, so what we were able to do is we were able to look at the solutions like, how about we implement a solution that eliminates those concerns? I mean, we never convert the audio into text. And that's where AI comes into play, where you have this new breakthrough technology where you can go, and solve the same problems without necessarily applying the tools that people were accustomed to using. NLP is being completely disrupted right now. And so I think, and Ben mentioned robotics. I think that's another very important area to focus on. That's one area that we have seen accelerate massively post-COVID, because that's the aspect of allowing us to function without necessarily relying on a human to be present. And like, for example, and I was speaking about this at the panel previously as well, is like, you've all seen those kiosks at McDonald's where you could go in and touch and do your orders. And I've seen those prop up in Asia a few years ago, many years ago, much before US and Europe. But I recall, even when I was at a McDonald's in the past and those kiosks were present, I would still stand in the line to talk to a real person. And I would wait in the line rather than go interact with the kiosk, because I figured, it's okay. I'm not used to it. And now, those trends have changed, right? So now, post COVID, you'd rather go there and interact with that kiosk where everything's available to you, or, the trends such as you're standing outside a pizza shop and making your order, or Starbucks, for example. A lot of Starbucks are the ones who are not set up to do a drive-through. They're having people order on their phone and then pick it up. But those apps are now using AI. I mean, there's a lot of technology. There's a lot of processing that goes behind. Hey, what was your preference? What did you order last time? I already tracked the amount of sugar you take, and you should probably be recommended this. Those are the small things that are now creeping in, which really amplify those experiences. But once you get used to it, once that gets built into your psyche, that's when you start to rely on, like, senior care, robotics, personal assistants. aspects of how we interact via voice and remote meetings. Like, so for example, this meeting, right? So if this was a business meeting, if we were to do this in person and we're trying to derive at an important decision point, we'll be looking at a lot of cues. We'll be looking at who's in, who's not in, who's sitting on the sideline. How do you do that on a Zoom call? How do you, I mean, if you have to make an important business decision over a Zoom call, how do you know without necessarily just asking everyone, hey, are you in or not? Because, are you really in? Or there's a lot of signals that you would naturally process in person, but you can't on a virtual setting. AI can help with that, right? So now we're analyzing voice, we're analyzing emotions, we're analyzing body language and facial expressions, and that gives the final decision maker a sense of who's really in, who's really not in. And now those things were sort of the fringe things a few months ago, last year, which is like, do we really need it? I don't think so. And now we absolutely need it. How fast can I get it? How accurate is it? Because my next board meeting is going to be virtual, and I need to know, I need to know where my stakeholders are at. That's how fast it shifts, right? It's in the psyches. Suddenly you're, I don't know, cool, cutting edge, but I don't know if I believe it, versus I don't care, I need it, let's put it in. Is it, how accurate it is? 70% good enough, let's get it.
Well, and it's like you said, our entire consumer behavior has changed, our entire behavior has changed, right? Both on the consuming and the enterprise side. And now specifically again, in this past 6 months, and we were already on this trend, things are going at a lightning speed. And to your point of accuracy, doesn't matter, don't care. Just get it to me, because things are moving way too fast and going, and I have to stay ahead of my competition, because if not, I'm no longer here. Right. Yep. Some of these technologies we've been talking about, and we've been talking, all week on VCTV, is, these are underlying technologies that will power your success or extend your longevity, your lifeline. And if you don't implement these, you don't take this type of advice, you may not be here. And Vishesh, I want to come to you, and then Ben, and then we'll got one more thing we want to talk about. But before the second half of our show, Vishesh, what are you seeing on the global level to Rana's point? I mean, you're sitting there in India and doing these investments throughout Asia, but then also in Europe and Israel. I mean,
yes, I think we're seeing
what's different.
We're saying a few things, right? I think you guys touched upon AI and accuracy. And I think we've sort of gravitated towards looking at AI, but looking at AI that can survive and operate in silos and do specific tasks with high accuracy and low data. I mean, for example, there's a company that we're closely associated with, essentially looks at CT scans and then is able to sort of give you a sense of whether you have a certain sort of disorder or not. And that's very specific to just CT scans. We've got a company in the Bay Area that essentially takes texts from customers and converts them into spa bookings. And again, so it's got to do with that particular spa, what service they have, or that particular training gym, who the trainer is. So AI is essentially, we're looking at AI to essentially automate tasks with intelligence, but with very small sets of data. What we worry about is when you start looking at general AI, which essentially means you're going to be looking for large amounts of data, try and reduce standard deviation, try and increase accuracy. We try and stay away from that, because our view is that the big boys, the big tech, will be very good at solving some of that because they've got historically large amounts of data. And we'd like to operate in deep areas where you could make efficient, smart business decisions without a lot of data. That's one. The more important shift or focus that we're seeing is really, at some point of time, people would want to know if this AI is explainable, if this AI is auditable, and is this AI even doing the right thing? There was a lot of press about how some credit card company and a big tech company were sort of being very biased in credit card limits to people of different gender. And that got a lot of action a few months ago, right? And so now you want to make sure that if you sort of build a certain algorithm, a certain model, how do you verify that it's sort of doing the right thing? At some point, if you want to 100% automate, if you want to let go of AI trainers, if you want to let go of control and you want to let the AI make decisions, and if it's large critical decisions, then you want to be able to make sure that you can audit it and the model can explain for itself and explain for the standard deviations and for the errors. And there's a lot of things that we're looking at there, and there's a lot of action going on around how do you label the data, how do you sort of backwork the algorithm to see if it's doing what it's doing right, and if it's made a certain decision, what is the basis of making that decision. And I think a lot of AI's future is going to be about how do you explain it, and how do you sort of look back and audit it. And that's sort of our view to it.
Yeah, and I mean that goes into to Rana's point of that data accuracy, right? There's so much data, so much. I mean, we had in an episode we talked a lot about online marketplaces and how the future of grocery delivery has dramatically changed, right? Where in 6 months, kind of globally, 7 months, here in the US, the past few months, more data has been generated if you're in these certain areas than you'll ever get in the past 10 years if you look back, right? On how our consumer behavior has changed, the things that we're doing differently, how things have shifted. That data is powerful. And going forward, to both of your points, that's going to be the new norm. But going back and rechecking that data, making sure it's been audited. And this is something Tony and Jonathan, I would love to get your opinion on from the blockchain and crypto side. Part of what blockchain does is help us to create that ledger, right? Create that trust that there is some level of data, and also create some kind of auditable record. And I know that there's some things coming into the space around auditing specifically to Vishesh's point, but Jonathan, would love to start with you. What are you seeing in terms of all of that that's being affected and driving, kind of maybe crypto and blockchain as well?
Sure. Well, while you were talking, I just had a new insight. I never thought about it, but we almost need a blockchain to keep AI accountable, right? Because otherwise it has a perfect record. It could always go back and change whatever it wanted, depending on the data that you're working on. You'd never know the difference. Mm-hmm. So that would keep it from being able to do that.
That's right. And there's actually quite a bit of an intersection there where those two areas are starting to cross over, right? Where blockchain's sitting on at the infrastructure level and keeping that record, as you said, of AI, and then also powering both in its different directions, whether you're building applications or the world of finance, or even Tony's world, where all of these kind of converge, and you've got the M&A markets. And Tony, what are you seeing when it comes to all this being combined? I mean, you're doing M&A, but you're also doing it on the blockchain, bringing those physical to digital. So what are you seeing in this space?
The one thing is we have to remember we're dealing with people, okay? And the one thing we always come down to is human beings, we're very simple beings, okay? Is we have two emotions, which is greed and fear, okay? And the thing is exactly what Jonathan, human beings, we need that feeling of, okay, just in case things happens. The insurance market was created. This is why everything has been created in that side, and that's the factor is we just need that feeling of that we're secure, and the emergence between the old and the new is key. I believe the old economy and the old businesses and the new businesses needs to come together. There has been opportunities since the COVID, but there has to be a mixture of both, and there has to be accountability. And that's, I totally agree, there has to be accountability either through a different protocol, but adding blockchain is one element to it, but there has to be more to it, because as with every technology, it becomes redundant in the future.
Mm-hmm. Yeah, absolutely. And with that, guys, I want to take a quick pause here as we've got some outstanding companies who have joined us today to showcase their projects in these spaces. But before we do pause, I want to let the audience know, and each of you know, as we come back to that second half of the show, I want to dive a little bit deeper on the investment side. So you as investors, what are you looking at, and how are you looking at these companies very differently? I know when I look at companies in the gaming space and VR, actually gaming, it's very different than VR, and VR is incredibly different than AI, and so on. So I would love to get your thoughts for our audience on how you're looking at these companies, the diligence, how you're thinking about making these investments, what's triggering certain decisions, and also what companies can do to prepare themselves when raising capital in this new environment in these sectors specifically. So we'll get to that in the second half of the show. But for now, I do want to welcome up our startups who have joined us today. And in this part of the second half of the show, each of our 4 startups will have 5 minutes hard stop to share with us what they are building and their companies. And to you startups, we know this is a big opportunity for each of you, and it takes a lot to get up there and show what you do. So don't worry, we're all here backing you, ready and excited to see it. Each company will have 5 minutes. There will be no Q&A in between. All questions and answers will wait till the end. Judges, our former speakers, each of you should have a form. If you don't, ping Elena, she'll make sure you get it. Fill out that form, and at the very end, we'll total up all the scores and we'll announce our grand winner. The grand prize winner will get a chance with me and all of us for something special, and then we'll go into that last half of the show and get a chance to share some deep insights for you, our audience, preparing you for this next generation of raising capital as well. And so without further ado, I want to welcome up our very first startup, Pastel Networks. It's on to you. You've got 5 minutes on the clock.
All right, thank you. So can everyone hear me okay and see the slides?
Loud and clear.
Okay, so Pastel Network is a system for registering, storing, and trading natively digital art assets, which can be provably rare. So basically, the art market is very inefficient, and it's inefficient for good reason, which is that it's tough to verify authenticity, and so the only way you can do that is to have dealers who have a reputation and take a big cut of the profits. And so we think that crypto offers a really good solution to this. And so the idea is that basically a digital artwork is, you can think of it sort of like as a limited edition print. And so that consists of the metadata describing the name of the artist, the number of copies that exist, but it's also the image itself, which we store off-chain in a storage layer of our own design, which is designed to be highly fault tolerant and redundant, so that even if most of the nodes go down, you'll never lose any of the artwork. And so the idea, there's a couple problems that come up that are extremely serious, which is that how do you stop somebody from taking somebody else's digital art, changing the hue or contrast slightly, and then trying to pass it off as their own? And so that falls under the problem of what we call duplicate detection. And it's a very, very tough problem. And the way we've addressed it is actually by using 5 different deep learning models, which actually take the image that someone wants to register, pass it through 5 models that have been trained by Google, ResNet, and these kind of big deep networks. And they get a fingerprint for it. And the fingerprint is totally robust across all sorts of transformations. You could even go into Photoshop and do a pixelate filter or edge detection, all kinds of stuff. And it'll know that this is too similar to an existing registered artwork, and it won't let you register it. Another problem is one of keeping bad stuff out of there. You don't want somebody registering a child porn, for example, because that would actually make it illegal to store the data on your server. So we are detecting for any kind of pornographic stuff, and that also won't be allowed. So in terms of how the system is designed, it's built on top of the Bitcoin system, really Zcash. That's what is used to store all the metadata tickets that define a registered piece of artwork, and also the trading tickets for how one owner can transfer that to another. And so it's not just the artist that can sell a primary sale to collectors, but collectors can then sell to each other. And all of that stuff is basically verified by a whole chain of tickets. And the tickets themselves are these highly compressed things that are actually stored as essentially Bitcoin transactions in the manner that other people use. The problem with that, of course, is that it's not scalable for lots of data. And so that's why the images themselves are on this associated off-chain layer, which uses what are called fountain coding techniques, so that even if you lose most of the data, we can reconstruct the missing data from what remains. And so, yeah, this is just a slide that shows the duplicate detection. And, you know, what I think is interesting about this is that, you know, this is really an enabling thing for non-famous digital artists, because it allows them to sort of, it's sort of like a cross between like a Patreon, where you want to support an artist whose work you like, but instead of it just being charity, now you can get back a limited edition print, where if that artist then goes on to become famous, it's sort of analogous to having like a Michael Jordan rookie card. And the beauty of it is that even that artist can't make more. If he says this is 10, there's only 10 of these prints, they can't go back, because the duplicate detection won't even allow them to make the same art again. And so you can know in a trustless way that the thing actually is rare. And you know, of course, anyone can just take a screenshot of the art, but the point is that that's sort of the same thing as having a PDF file of Superman #1. It's might be interesting, but it has no value. No one's going to pay you for that. And so we think this is a really interesting way for, especially in emerging markets, and people who don't have access to the New York City gallery scene, can actually create art and sell it into a public global audience. And we actually think, rather than focusing on the super high-end fine art, we think a lot of things like the anime community and other kinds of digital artists who have a following, it gives them another good way to monetize their work, and it gives collectors a way to support artists they like. And I think, are my 5 minutes up?
You got 30, I'll give you 30 seconds to wrap it.
Yeah, so we just basically view this as a really solid technology. There are other projects that attempt to solve this problem, but they don't build on the good foundations of basically Bitcoin/Zcash for the core coin and to actually store the data, something that you can trust. And they don't solve the tough tech problem of near duplicate detection and not safe for work content detection. And they don't solve the, and if they do try to attempt to do the storage problem, they use some much bigger complex system with a big attack surface, whereas we have something that's specialized for static images and works super well. So.
Awesome. Jeffrey, let's go to your quick last slide so everyone can see where they can find you. We're over time.
Sorry, pastel.network is the site. And you can read our white paper.
Wonderful. Thank you so much, Jeffrey. Sorry to have to cut you off, but we want to stick to time for everybody. So judges, since Jeffrey was our first, make sure you do get your scores in, submit those over to Elena. If you don't have the form or you're having issues, just contact her in our chat. Next up, I want to welcome Daryl. Daryl, are you here? Yes, I see you. So Daryl, your time is here. The floor is yours for 5 minutes. Daryl? Okay, we'll go on to Athana. Athana, are you with us? Yes, Daryl. Yes, hey, Daryl, the floor is yours.
Absolutely. Good afternoon, ladies and gentlemen. My name is Daryl Speaks. I'm the CEO and founder of Sable St. Coin Corporation. My background is business development and civil rights. I live in Miami, Florida, and I've worked with the ACLU Urban League here in the United States. SableSend is the world's first digital ecosystem that focuses on empowering Black communities worldwide to eliminate poverty, because we understand there's literally over 3 billion people worldwide making less than $1.90 per day. So let's talk about solving some of those issues. What we understand is this. Number one, the Black community worldwide is the largest unbanked population, okay? That population is unbanked, lack of currency circulation in these communities. Okay? Number two, we have the
Daryl, I think we may have launched you. So we'll try to come back to Daryl. Apologies, everybody. Athana, are you there? We'd love to just kick off with you if you're available.
Yeah, Kyle, can you hear me?
Yeah, loud and clear. Yeah, you're audible. You got your headset on, Pokemon style, looks good.
Thank you. It is my favorite from my sons. So
I can see Jonathan all smiles over there. So go ahead, floor is yours, 5 minutes.
Great. I hope all of you can see my screen. Yeah, great. Thank you. Thank you, everyone. So Enercent is a portmanteau of energy and incentive. So we started the company with rather a rant saying that, the world needs smarter energy and why is it not adopting? And we said, how about we incentivize it right from the beginning? So hence the concept of Enercent was born. And just the agenda for the evening, it's the usual guidelines that LA Token had given us, and we try to force fit into that. So there's a problem statement, there's a solution, there are products and services that we are offering. There's a history of us, facts and figures, including our billing and our customer traction, and also about why we are so unique, and a little bit more about the success story and how our customer treats us, and a brief slide about our team, and also what we are looking for in terms of investment and the highlights of it. So our reason to exist is EV charging is actually a multi-sided problem, and it's not linear as most people like to think. So it's not as simple as buying a car and expecting that you'll find a charger en route or anywhere that you travel and be done with it. So there's a lot of sides to it. So from the user side, the problem area is the range anxiety continues to plague people. I mean, I love the fact that Tesla addressed that as a primary focus, but not many OEMs are following that. So range anxiety continues to be a problem. And in terms of availability of charging and how you plan your route, that's another major challenge for anybody who has an EV, and including yours truly. And after that, the economics of it, right? Where do you charge it? Do you charge it at home in your garage, or do you charge it elsewhere? Do you charge it at office, in a mall? And what's the return on investment with respect to a per kilometer or a per unit of consumption? That's another major problem from the user side. And with this, discovering chargers, infrastructure, all that goes hand in hand in terms of the complicating the problems that they have. In terms of the operations of EV charging, especially the infrastructure owner, their problems are how do they go and standardize, and how do they have interoperable hardware that works with most of the EVs that are on road rather than cater to a specific model. Second is how about minimizing the capital expenditure on that, and how do you go and monetize EV charging? Like, it's not just as simple as buying energy from someone and just doing a cent or 2 cents of margin over it like utility players. It's not as simple as that. And third, how do you go and measure what a vehicle has drawn and what a charger has drawn, and how do you go and make them available, and the whole 9 yards of it. And from the grid perspective, the bigger problem is how do you go and forecast the usage so that you don't break the block level transmission and distribution? And how do you go and measure? How do you go and monetize time of the day usage? How do you go, peg the charging rate with what you do in the real time, and how do you give a proof of that to the end users that you're really buying energy at a very expensive price? And how do you go and orchestrate this with multiple sources, including grid, including your own captive solar, diesel generators, or massive flow, or lithium ion based storage? How do you go and orchestrate between all of that, and how do you go and measure and have accountability with respect to what you're doing? These are the problems that led us to actually incorporate the company with a strong vengeance, that we want to go and address energy market starting with the EVs. So we try to solve the problems of all these three sides. So in terms of the range anxiety and the user focused, we actually have an app. And what the app does is, based upon the vehicle that people have, we go and map them to the kind of chargers that are available within our network, and we support both standard and non-standard chargers. Second, for businesses that have EVs as fleet, they can't be toying around with the idea that whether the vehicle can go forward or not. So they need guaranteed availability of charging. That's what we try to do through the app. And most importantly, for a lot of people who do deliveries, including for their work, like essential delivery workers or online delivery workers, there's an option to charge at home. So what we made possible with our business model is we made charging through our network and in the warehouses is cheaper than what they could do at home. From the operator point of view, what we do with respect to the interoperability and monetization of it, we actually offer standardized charging infrastructure with zero capex, right? And if it's a non-standard chargers that the people are talking about, obviously there are going to be a little bit of charges that we're going to add. But if it's standard, if it's global standards of DC2 or DC3 charging, we own the infrastructure. Second, we actually have built the entire services on how do you go and monetize from an operator point of view, right? Parking is a major problem in cities, including India. So how do you go and charge for parking if it's at a different location? How do you go and differentiate the price based upon the time of the day? And there are many other variables like that. And then most importantly,
30 seconds left, just to let you know.
Sure. And how do you go and do billing and the settlement? And from the grid point of view, there's a lot of orchestration that happens. So what does NSN do? We actually have an app that B2B or fleet operators can use, their drivers can use to book charging stations. And we are completely interoperable, and the charging infrastructure is owned by NSN, and we interface with multiple energy sources. And we give a proof that we source from XYZ. So far, the story of the founders, we pumped in about $100,000 into R&D and product building with only 4 full-time staff. We're now about 12 people strong and 7 engineering. We have India's largest online grocer as a customer. And in early 2019, we won Ministry of Power's Hackathon's #1 award for the EV team.
Sorry, buddy, I'm going to have to stop you. We've gone a little bit more over. So, thank you. And judges, make sure you take a moment to get your scores in. Athana, thank you. We'll be back with Q&A here shortly. Philippe, are you there? All right, Philippe, welcome back. We're excited to have you, but if it's your time, you've got 5 minutes on the clock. Go for it. And you're on mute, just to let you know. All right.
Yeah, thanks so much for having me. My name is Felipe Pinto. I'm the CEO of Bit49, and our vision is to make crypto mining great again. Crypto mining has a bad rap. It's been bad for the environment. It's been bad for a lot of people that get in at the wrong times. And there's been a lot of things bad for local communities and governments. We want to turn this set of circumstances on their head. Crypto mining is, nevertheless growing fast due to a lot of technological innovations and things on the demand side that you're probably very familiar with. And one special feature about it is that if it's done right, it's higher risk to reward than just buying and holding crypto as an investment thesis. We're laser focused on miners today as sort of our start off point. Solutions out there are not great. You either get this all-in-one hosting solution that's expensive, a lot of secretive features, or you have to cobble together things yourself, and it's a massive headache for miners. We want to make things very accessible to the public at large, to institutional investors, and offer a product that derives from mining that would be very easy and more profitable, easy to access and more profitable than mining is today. We do this using a lot of basic principles from just good business, fair and transparent pricing, and we translate this into better returns. There's a lot of non-rocket science to this, having a optimized hardware and software platform. And to date, based on just with the MVP that we have, we've got a lot of customers that love us, and with publicly verifiable positive feedback. We've got a lot of traction. About $250,000 in MRR. We sold into more than this, but had supply chain and infrastructure constraints, and we've got a lot more in the pike. The opportunity set, the opportunity size for this is pretty big when you add up the sort of adjacencies in the global market, it can approximate $10 billion. And its global hash rate has been growing quite fast in the last few years. So what does the business model look like? Well, today you have to buy the miner, you have to host it somewhere or co-locate it somewhere, and there's an ongoing monthly fee, thus the recurring revenue component. To date, we've used sister facilities, not our own location. In the future, we will just vertically integrate this, and there will be a different kind of agreement that's a lot easier to buy and even perhaps resell. Our customer acquisition costs are pretty great. We think that these are really scalable, especially as we lower our overall cost structure. And we have a lot of leads and deals in the pipeline we think would materialize once we have our own facility. So just to skip ahead in the interest of time, there are a lot of other products and adjacencies that we would attack sort of along the way, but all this would be in the service of making mining more accessible and lucrative for all. Why now? There are a lot of regulatory and engineering-based trends that are just now converging that we think make it so you really want to go big on mining now, and it'll be too late a few years from now. I'll just jump to the team really quickly. So, I got my MBA at Stanford, where I met our co-founding CTO, who got his PhD in computer science there. Love AI. He's applied AI to hardware architecture, but hardware architecture is sort of his bread and butter. And in that way, we're very differentiated even from new entrants. We're raising 400 to 500K as a safe to kickstart some long lead time items, but overall it's a $12 million raise that we're looking for. Although, we've been asked to do more than that. We have very clear uses and milestones that we're targeting as well. And the final thing to say is just, this is, you may be wondering if this is a venture backable return. I would say that it absolutely is. Ventures have also backed, competition, new entrants. There are ways to collateralize other sort of capital intensive parts of the investment. And, but that's also the beauty of this. There are a lot of other use cases, AI being one of them, that you could reconfigure the infrastructure that would form the bulk of what we'd be raising money for. So hopefully I made 5 minutes. Happy to take questions.
Awesome. Thank you very much, Felipe. We're getting one more startup. Daryl, welcome back. The floor is yours. You've got 5 minutes. A screen share is on the big green button on the bottom of your screen. It's all you.
Okay,
Judges,
thank you
make
so
sure
much.
you're getting your scores. Yep.
Can you hear me now? Am I getting a bad connection?
Well, you're getting a bad connection, but let's go ahead and try it.
Okay. Hi, can you see me now?
Yes.
Okay, great. Hi, my name is Daryl Speaks. I'm the CEO and founder of SableSync Coin Corporation. What we've done is we've realized that the Black community across the diaspora is having issues with financial transactions, and we want to discuss some of the issues and the problems that we're looking to solve. First and foremost, we've identified 4, and these are problems that have existed over the past 400 plus years, if not longer. We have the highest number of unbanked people. Secondly, we are the lowest in capitalized funding across the globe. We have the lowest level of currency circulation within our communities. And lastly, we're limited to the global connectivity of our communities across the diaspora due to regulatory compliance issues. So what we've done is we created a digital wallet system and cryptocurrency model, which includes an API, which is an application program interface to connect Black-owned businesses, communities, and governments worldwide. And we also created stablecoin SAC1, which is a culmination of a mining and a staking currency. And we've connected with every major Black and diasporan organization around the world. Presently, what we've noticed that there's about $5.3 trillion in global currency that's being circulated across Europe, Asia, South America, America and Africa, and the Caribbean. There's traditionally about 1.4 in the United States, but we took this model based on the entire economy. So we have SAC1, which is presently to launch here on LA Token, and 12 additional exchanges over the next 18 months. We've been pegged by the Jamaican Stock Exchange. I was there, and the Nigerian Exchange, as it was called a global remittance provider. We have the SAC wallet, which has features such as payroll, invoicing, affiliate marketing, escrow services, subscription services, trading, and we also have a Visa MasterCard system that's embedded into the wallet. I'll be releasing 100,000 SAC1s over the next 12 months. We have a total market supply of 1 billion that has an algorithmic formula in the smart contract for 400 years. So there'll be 1% of those 400 million coins minted per year. We have an 18 decimal digit place. We project our revenues will be at least at minimum 1.7 monthly. We're going to maintain the lowest possible transactional fees for our clients because we're focusing on gas prices of the SAC1. Okay. Next, we talk a little bit about some of the industry terms. Yes, we are a cryptocurrency, but we're not an investment. We classify a digital currency as a digital medium of exchange. Yes, we are an asset, and yes, we are a cryptocurrency, but we do not consider ourselves an investment because we understand that money is what's needed to be pegged to a product, and it consists of any gains or any losses. Okay, so we are a currency of exchange for all products and services. We donate to all nonprofits in our community to help build roads, schools, and in mining, as well as additional resources, farming, and so forth, etc. Okay. Some of the additional things, we're partnered with many organizations, the national chambers, football leagues, WeBuyBlack.com is the largest black marketplace, and many others. We also have a data mining partner who has access to 250 million people in our ecosystem. Our team is very robust. We have 30 team members. I personally bootstrapped the company myself for the past 3 years. We have people in Africa, Haiti, Jamaica, the United States, Canada, and Brazil. Okay. I've been to Jamaican Stock Exchange and I've been to the Nigerian Exchange myself. I've met with billionaires that encouraged me to move forward, that this is a very influential project and I'm very excited to be involved. I've talked with multiple level of economists, including Dr. Boyd Watkins, who also incentivizes and pushes this mission forward. I've also spoke at the United Nations and talking about how digital currencies can help eliminate poverty. I'm on speaking engagements 2 or 3 times per week, and I'm presently expected to speak at multiple conferences that are all digital. So any questions, please let me know. Thank you.
Awesome. Thank you so much, Daryl. To all of our speakers and judges, please make sure to get those final points and rankings in to Elena through your forms. And now we will get to the Q&A session of this. So without further ado, I do want to kick off questions with Jeffrey. So I want to come to Fred and Tess. So starting with you, Fred, any questions for Pastel and Jeffrey at Pastel?
Okay.
Frederico, you're on mute, just an FYI, buddy.
Okay. Actually, I would have plenty of questions. Let's start with Jeffrey. First questions, you mentioned on your website Cryptopia, and well, Cryptopia has been dead for a while. And why is that?
Sorry. Yeah, we should probably update that. Originally, this project started out as a fork of a much older cryptocurrency called Anime Coin, which was for the anime community, and since we see that as a prime target area for this, and so, but obviously, yeah, what happened with Cryptopia is a disaster, and so yeah, we're no longer trying to do anything with them. So
okay,
it was going to be our listing, but now we're going to list on other exchanges.
My second question is on the same line of thinking, because I was looking at the team, and the team seems solid when you look at profiles, but none of them mentioned the project on their LinkedIn profiles. So how are the team working together in this project specifically?
Well, so there's 2 full-time. I originally was doing a lot of the code together with another guy named Alexei, and I basically designed the system, wrote the white paper, and you know, in conjunction with this other guy, Alexei, and who's more of a C++ security focused guy, whereas I'm more of a Python, data science, machine learning person. And at this point, since the core of it is done in terms of design, we now have another programmer who's working full-time on this, confusingly also called Alexei, so there's two of them, doing all the Python work. He's nearly done with the wallet software. And so, yeah, most of that code is done. And so we have a Slack, and we get daily updates from everyone on that. And so, but the core C++ part of the code it came from originally essentially bringing together of the Zcash code base with Dash, because it's a master node project. And so the other Alexei is in charge of that and is works on that daily. So.
Okay, I make another one?
Yes.
I'm asking Kyle because of the time.
Yes, yes. You got one more, and then I got to jump over to.
Okay.
I want to get to Rana real quick. Actually, let me hold you there. Rana's got a quick question. So Rana, sorry, I want to jump in, and Fred, I'll come right back to you. Rana, do you have a comment for Jeffrey, or would love to get your thoughts on Anganath as well? So I'll let you jump in because I know you have just a minute.
No, I didn't. I just sort of mentioning that I do have a hard stop at 9:30, but no questions for Jeffrey. Sorry, from my side.
Okay. Okay. Since you do have a hard stop, any questions or feedback for the group as they presented? I'll give you a minute here before you have to go.
Yeah, I mean, I think some good pitches out here. There's a few aspects I'm really interested in learning a little bit more about the model that Felipe offered. I mean, I want to sort of deep dive into that a little bit. I didn't quite understand sort of some points of differentiation. So I think that there's some aspects which I would love to get into a little bit deeper on that. So that was one area of interest, particularly. Yeah, I'll just say that.
Awesome. So, Philippe, do you have a second to comment on that?
I do. I think that given the public nature of this, I might want to, I mean, look, the space that we play in as it is today, and a lot of the underlying technology is just going to become very commoditized. What I would say is we have a very specific software-based platform that I think would add a specific layer of differentiation. I think another piece is sort of acquiring low-cost energy. We've sort of surveyed the energy markets for about a year, and we think that we have a long-term plan that would allow us to get to the lowest cost energy available anywhere globally, and would be happy to walk you through that. So those are a couple of the points of differentiation that I would say differentiate us from new entrants. From the existing competition, I think that those are sort of far and away not even something on their radar. But I think I'd feel more comfortable sort of talking you through the specifics a little bit more in private, if that's okay.
Okay. Another quick question. So you'd mentioned there's a figure in there revenue-wise. Do you have any revenues right now at this point? What is it, if so?
Yeah. So we have about 200K in MRR right now. We sold about between 400 and 500K during mostly the bear market in 2019, and so our model is very counter-cyclical in some ways.
Okay. All right. Sounds good. Thank you.
Awesome. Thank you, Philippe and Rana as well. Tess, any quick questions for Jeff and Fred? I'll come right back for one more. Don't worry. But Tess, any questions for Jeffrey?
Yeah. Well, first, I think all the founders, they had stellar backgrounds and great complementary teams. So, the pitches were, quite well done. For Jeff, I would like to find out a little bit more of who you do see as your specific competitor, and maybe, or just an indirect competitor who is playing in your space, and how have, sort of their trajectory been, and if there, has been some notable kind of long-term growth, sustainable path.
Yeah, so I actually don't think we have any sort of true competitor. I know there's like a project, like I think it's called Polka, or no, sorry, not Polka. It's been a while since I've looked at our competitors. There's one that is a Ether-based coin that it's just a token basically, and that's it. It's essentially just the metadata part. It's not tied to any artwork. It's I don't really see the point of it. I mean, to me, this isn't interesting unless it integrates actual, like the storage of the image file itself, and unless it integrates these core features of duplicate detection. Otherwise, it doesn't actually offer you a provably rare art asset, because someone else can just make a, you know, it'd be like the problem that Twitter has with people, you know, pretending to be Elon Musk and tricking people all the time. That, you know, you have to solve that in a decentralized way. And so I think what other people have done in the digital art space is essentially nothing more than like a sort of a certificate of, you know, authenticity, if you will, but like with nothing backing it up. There's no teeth behind it. And in particular, I'm very much a believer that you shouldn't be a token on a much bigger ecosystem like Ethereum, because then you don't actually control your own destiny. And you know, for example, a project that may have made sense on the Ethereum network in, you know, 2017 or whatever, like when the price of gas explodes, and now suddenly maybe it doesn't work anymore. So I think you need to control your own destiny. You need to be sort of your own project from the ground up. But at the same time, I also think you can't reinvent the wheel. And so that's why we built on essentially Bitcoin or Zcash.
Interesting.
Basically. Yeah.
Interesting. I do want to say that I really do believe the art space is very interesting. I myself have a lot of friends that ask me all the time how to diversify their investment. And given these are the ultra high net worth that really can't diversify, I have been evangelizing 1% should go into crypto. And of course, you know, Bitcoin right now is, you know, the whole last 2 years has been one of the clear leaders, along with some other, you know, amazing, you know, technology and crypto asset alternative. The other one was art. I have been mentioning that, you know, for them, they should diversify some of their portfolio into art. So I think in terms of attracting investors and just people to be, you know, actual, you know, contributors to what you're doing, if you target the right group of people or those with those relationships, I think they're looking for areas that, you know, are innovative and use tech as an enabler to help them in this, you know, area. So I think, you know, keep doing what you're doing. We need to, you know, we need good, you know, founding groups that can tackle this market.
Thank you.
Awesome. Thank you so much, Tess. And real quick, Fred, any last quick question? I want to be able to move on fast for the rest of our startup. So any last questions for Jeff? Just one.
No, my question was exactly what Tess just asked. So
perfect. Awesome. Vashish, I want to get to you around Anatha, excuse me. You know, I thought that this would be a good project for you to comment on. Any questions, comments, or feedback for Anatha?
Well, I think we've done something in EV, and I think you've sort of addressing the pain points of range anxiety and finding a network to solve for it. The tricky part that one needs to keep in mind is the batteries are the ones that are the most expensive. They cost about 40–50% of you know, of the BOM cost of a vehicle, and hence your charging infrastructure and the ROIs on it sort of needs to justify the network expansion plans that you have. So the devil's in the details. That
thank you so much that you addressed. So we actually already have solved a lot of those, and maybe we could take it one-on-one. Or
absolutely.
Yeah.
I was only going to suggest that I'm happy to leave my coordinates with Kylie and Elena, and then you could write to us and be happy to set up to take it offline.
Perfect. Thank you.
Awesome. Wonderful. And then, you know, Jonathan, I want to come to you. Any comments or feedback for Philippe over at Bit49?
Yes, actually, I was wondering, in one of the slides you mentioned that now's the time to get in because in a couple of years it'll be too late, and I'm shortening that a little bit, but I want to talk about what happens after 2 years. How will your model change to make sure you still have demand for solutions?
Yeah, I think so. Mostly what I was alluding to was on the cost side. So, you know, obviously over time you should just expect everyone to innovate on the OpEx and CapEx side of the infrastructure for crypto mining, and for that to sort of flatten out. I think once it's flattened out, it's just not as attractive to put forward all the CapEx needed. You're going to get a lot less ROI on that sort of thing. And so it's admittedly a foot race, and now is sort of, I think, the time to get in. The reason it hasn't, there are very new entrants that are starting to raise tons of capital to do that sort of thing, is that a couple of years ago it wasn't obvious that that was a good idea. There are innovations in immersion cooling, for instance. There are other things that open up when you sort of try to do large power at scale that just weren't available to the folks that were bootstrapped doing a lot of things smaller scale, at least stateside, a year or two ago.
Gotcha.
Got it. Thank you. And then Tony, any feedback or comments for Philippe?
From my point of view, it's very simple. It's just like, what are you looking for, and what and why? What's the potential going forward? Because the anime, I agree, there's a huge amount here, because we've actually have a business that does the exact same thing, but in the physical form, in regards to artists doing the prints and stuff like that. So we understand the thing. It's just from my point of view, is what's the growth, what's the potential? But we can have a chat about that later. I know time's running away, and Kyle, you're looking a bit stressed. I'll give be nice for a change. Okay, I'll do the chats afterwards.
No worries. And we'll make sure everyone gets connected. So startups, feel free to drop your contact details into our chat. And then everyone also is available on social media, or feel free to reach out to Elena and myself, and we'll help you get connected. Without further ado, I do want to announce our winner, and thank you to all of our judges for getting in your scores early and on time as well. And to all of our founders, huge appreciation. As Tess mentioned, and I'll echo, it takes a lot to get up here and showcase what you've been building, not just to us as investors, but also to a live studio audience, or audience in their homes today. And so we're very appreciative, and good job to each and every one of you. With that being said, I'd like to congratulate our winner today, Philippe of Bit49. Congratulations.
Thank you. A lot of great pitches, and I know this was more AI focused and such. Thank you for the questions and the pushback. Would love to, I will definitely be reaching out, and would love to air those out and chat more privately. So thanks again.
Wonderful. And where can everyone find you?
You can email me, Philippe@bit49.io, LinkedIn. I'm sure you might, however else you want to reach out, feel free.
Perfect. Thank you. And Jeffrey, where can everyone find you?
I put my email in the chat. It's jeffrey.emanuel@gmail.com. And yeah, or on LinkedIn, I guess, too.
Awesome. Daryl, where can everyone find you in the company?
Thank you. You can find us at sableascent.com. Definitely, I love LinkedIn, Twitter, and also on Slack, SAC1 Sablecoin on Slack. Not Slack, I'm sorry. Telegram.
Telegram. All right. Perfect. Anvana, where can everyone find you in the company?
Bhargava at nsn.co. I just dropped it on the chat as well. So
awesome. And take a look at them on LinkedIn as well. And to our speakers, again, thank you, startups. To our speakers, I want to bring one final topic into this to this panel to wrap up. As investors, we're looking at opportunities in these sectors we talked about. So again, AI, robotics, VR, gaming. What has changed at how you look at each of these companies? And then if you have one piece of advice for founders that are raising in these categories and what they should be preparing for in this area. And so I want to start with you, Jonathan. So what are you looking at, or how are you looking at companies differently in these areas now that things are moving so quickly? And then what's a quick piece of advice for founders?
Sure. So I think the number one thing to look at right now is how market ready are you? Are you going to be shipping product this year? If not, probably not too interested, or at least having a framework that someone that could help move product quickly can acquire and create a joint alliance to get things moving faster.
Awesome. And Tess, to you, same question. How are you looking at companies differently on the diligence side as an investor in these areas? including blockchain, as I know we have got a lot of crossover between all of those, and then a piece of advice for founders looking to raise capital.
Great question, Kyle. I definitely think the biggest part that I am a little bit more scrutinizing is the capital efficiency part, meaning how does the team utilize their capital and their war chest. In the past, when the funding environment, investors, absolutely, they come in all shapes and sizes. There's a lot of the tourist VCs we call, so much money just going into venture. So today it is critically important. There no longer is that much disposable access to capital, is how the team realistically is going to manage their burn rate. And on the same token, how fast are they going to be able to achieve that, like what Jonathan said, product market fit, and ultimately really be very rigorous with revenue. When is revenue happening? Because it's great to support founding teams with a vision, and then some of them have technology. However, do they have a product, and does the market want the product? So really be very, very diligent on that. Reach out to advisors, partners and investors to really, try to get them to help you with that.
It's great points. Revenue, make money. So you can stay afloat in any time, in any situation. Fred, over to you. Same question. How are you looking at, and you're on mute, just to let you know, how are you looking at deals differently right now, and a piece of advice to leave founders with as they prepare for these new fundraises?
Actually, we haven't changed it that much in the past few months, because we had that changed earlier before, and especially in the crypto space after the boom in 2017, we already start to down to earth kind of thinking and looking for, and that's also an advice, looking for projects that are more, have traction, a committed team, and that can deliver in a reasonable way, especially from the risk reward perspective, because we had some out of this wood kind of valuations before. So that has been our kind of thinking from the past 24 months already, I would say.
It's good. It's a good piece of advice. Tony, same to you. I mean, now you're sitting as well, not just in these areas, but also in the intersection at M&A. What are you looking at things differently now? You're bringing blockchain into your world, but also a piece of advice for founders.
I think it's the one thing I look at is basically a mindset that is actually covers both. Most tech people don't have the business sense, and some entrepreneurs don't have the tech. I look to see that they've actually got the both mindset, because that's what is needed in the current climate, and also current projects and current businesses. I asked them to show me the last pitch deck. Okay, show me your last pitch deck. If they show me a pitch that has been updated since the coronavirus, okay, it shows me they do not adapt to survive, okay? And it's a very simple thing. Don't tell me love me, show me love me. Yeah, I like action more than words, and that's with all kinds of projects. It's very simple. Investment is for us. It's how do we get our money out? That's the main thing. As Tess said, it's exactly where's the revenue? How are we going to get the money out? How's the growth? It's simple. It's supply, demand, and that's it. Basically, let's keep it simple.
Yeah, no, couldn't agree more. And Vishesh, same question to you as well.
So fundamentally, we're not seeing things too differently from before. I think we've sort of gotten into deep tech and deep sciences. Markets, a lot of what we've done or what we plan to do continue to be where they are. I think the advice as far founders are concerned, particularly to fundraising, is that it's interesting times where people don't get to meet each other. And a lot of these transactions are being done on Zoom or over the web. And building trust between the two parties is a critical task to get done. And hence, it's sort of important to begin that early and try and get people involved into how you're building what you're trying to build, so that you're able to build an element of trust in that. It's going to be hard to do it without that.
It is, and to that point, this new era has brought in a lot of changes, as each of our investors have mentioned today on VC TV and on previous editions as well. And one thing I'll leave all of you with as an audience today is, it's about the relationship, right? Building that trust, as Vishesh said, and really nurturing that over time. Before, there was a lot more opportunity to get a warm introduction, meet people, see those, those reactions in person. Now that process has changed. We've got more video interaction, which is going to extend out that time it takes to build and develop that trusted relationship to what may or may not lead to an investment at the end of the day. So be patient, make sure you're updating, make sure you're clearly expressing your thinking, not just for the current situation, but going forward in the next 6, 12, 18, and further months ahead. And so with that, to each of our startups, again, thank you very much. To our speakers and our investors, I'm going to call on each of you, where can they find you, them being our audience online, and then we'll close us out. So Fred, where can everyone find you online?
I just post my LinkedIn profile on the chat. And if you want, you can drop me a line by email, fred at leadsglobal.net.
Wonderful. Vishesh, where can everyone find you?
You could write to us at vishesh.rajaram@specialinvest.com, or you got a group email ID on our website, which is www.specialinvest.com, and we'll make sure we write back to you.
Wonderful. Tony, where can everyone find you?
I'll mute myself. Now, they can find me on LinkedIn. Tony Evans, Tokyo can find me, and I'm also on Telegram. But also drop an email on the website if you need anything, or just have a chat. We're open, and we've got a global network. So
perfect. Jonathan, where can everyone find you?
LinkedIn would be best. You can look up Jonathan Keim, spelled AN for Jonathan, and you can also find us at cryptocurrencywire.com.
Awesome. Tess, close us out. Where can everyone find you?
Excellent. LinkedIn is the best. Tess How, TESSHAU, and Twitter, Tess How1. I look forward to keeping in touch.
Awesome. And again, thank you to all of our speakers and investors today for joining us on this panel. Thank you to you, our live audience, for joining in today, for all the great questions and comments and the engagement throughout today's episode of VCTV. Again, a big thank you and shout out to Elena and to the entire LA Token team for making this happen. I'm Kyle Ellicott. You can find me at Kyle Ellicott on all social media, as all the speakers have just said. Would love to hear from you. And with that, we'll see you back here on Monday on another edition of VCTV.